Hey traders and investors, it's Serge Berger here. The large outperforming stocks to a good extent in 2015 were some of those FANG stocks. A lot of those were technology related stocks and components of the Nasdaq 100. And I do think a lot of those stocks, Amazon.com, Apple, and those kind of stocks are increasingly showing relative weakness and to some extent absolute weakness. And that is, in my opinion, just going to be a matter of time now until the NASDAQ 100 or the QQQ ETF is going to start rolling over along with the Russell 2000, which already has, and of course, ultimately the S&P 500 as well. If we look at the multi-year weekly chart here, we see a very similar picture, one that we see resembled also on the S&P 500 and other indices, and it's very much that of a topping pattern that really has been in place since late 2014. So to that extent, the Nasdaq 100 is very much resembling what's going on in the rest of the market. We have a lot of horizontal resistance that ultimately, I think, after another lower high here, will break this market ultimately lower and below those support lines. So let's have a look at what this looks like on a daily time frame, so we get a little bit of perspective through the multi-time frame analysis. And you can see we have a very simple medium term, let's call them moving average 50-day in yellow, and then the 100 and 200-day in blue and red respectively. And you can see all of those are finally starting to turn lower here after we had basically a failed breakout here, or failed attempt to make new highs, or new lasting highs, I should say, late in 2015. So that's the important thing to keep in mind. We've had a failed attempt at new highs. So when we broke to those new highs in November 2015, i.e. breaking above the summer 2015 highs, those didn't last very long. Made a series of lower highs then within that range, and then ultimately we've seen, as a result of the January drop off in the broader market, seeing these medium term moving averages break lower as well. You can look at some of the top components of the Nasdaq 100, of course, one of them being Apple. In fact, that is the most heavily weighted stock in the Nasdaq 100. And here, if you draw a real simple line, just for perspective of support and resistance, you can see we're sort of coming into this area of resistance here. What used to be support may now finally be resistance. So just one way of looking at this, and plenty of stocks, of course, within that index as well. It really comes down to some extent to some of the belief system. If you look at things like Amazon.com, which had a monster year in 2015. You can see this stock had a real sharp drop like 40% from peak to trough already this year, and now had a rebound. So what we're most likely going to see is another test here to the downside, and ultimately, I would think below those February 2016 lows. And so that is most certainly also going to weigh on things like the Nasdaq 100. So want to just raise a bit of a red flag here, a bit of caution on the Nasdaq 100 for those kind of reasons, that a lot of these stocks within the index, or at least somewhat related to the index, are starting to roll over in a more meaningful time, or in a more meaningful way. And now that we've had our first real bear market bounce, again, very nicely reflected in a stock like Amazon.com, ultimately, I think this is going to set us up real nice to layer out some shorts and sell into this overbought, i.e. bear market bounce. So I hope this makes sense, guys. Let me know if you got any questions on this down in the comment box. Please subscribe to my channel. That's how I move up in the YouTube ranks. And like the video, and I'll see you in the next video.